The Fed sees higher growth, stronger inflation, and slightly lower unemployment for 2024, but officials still barely see a median of 3 rate cuts for 2024. 9 of the 19 members, however, said they thought 2 or fewer rate cuts would be appropriate. 10 saw 3 or more. They did not change rates today. The dots move up a little bit next year. The median sees 2 cuts to 3.9% in 2025 instead of 3 cuts, 3 more to 3.1% in 2026, a slightly shallower path. The committee's median long run, the natural rate, also moves up to 2.6%. GDP is projected to increase 2.1% this year, a significant upgrade from the 1.4% in the December forecast. Growth is also higher in 2025 and 2026. Unemployment will end this year at 4%, Fed officials now say, instead of 4.1%. And core PCE inflation will fall, but only to 2.6% instead of the 2.4% seen in December. Headline inflation unchanged at 2.4%. The only change to the statement is job growth is no longer characterized as moderating. Language about considering any adjustment to the target rate, commitment to the 2% inflation target is the same. The decision was unanimous. And finally, there was no mention of the balance sheet in the statement beyond keeping the $95 billion in Treasury and mortgage rate caps each month.
Mike McKee, I'm going to turn to the price action in a moment. But I've got one question I need to ask you right now. Let's go through what you just said again. So faster growth, lower unemployment, higher core inflation, then something jumps off the page. It's exactly the same median dot with some changes around the surface, I know, in and around. It's more nuanced than that. But ultimately, the exact same median dot than December, as December. Mike, can you make sense of that? How have we just revised growth higher, revised unemployment lower, and core inflation up for 24 and left the median dot unchanged?
Well, you have to look at it as the median dot because others did change their views around that dot, but nobody moved significantly higher to push rates up. One person did. They needed 2 to move it up, to move the median rate up. But as I noted, 9 of the 10 now say 2 cuts or less. So it is certainly possible if we see similar inflation and jobs numbers going forward that this could change again. And at the next meeting in June, when they put out a new forecast, they could go to 2.